Welcome, curious minds, to another deep dive. Today, we're taking a closer look at a company that's really making some waves in India's renewable energy scene, ACME Solar Holdings. You've got quite the stack here: earnings reports, investor presentations, all for their Q1 FY26. Looks fresh off the press.
That's right. And our job really is to cut through all the details and the jargon. We want to pull out the key insights about ACME Solar's finances, their operations, where they're headed strategically, give you a clear picture of what makes their performance stand out this quarter.
Right. So think of this as your shortcut to understanding a major player in India's clean energy shift. All the essentials, none of the fluff. It's not just about the numbers, is it? It's about how that strategy actually plays out on the ground. Okay, let's unpack this then. So keeping that strategy in mind, let's jump straight into the financials because wow, ACME Solar's Q1 numbers really paint a picture. The top line growth is pretty striking. Consolidated total revenue shot up, 71.8% year over year, reaching INR 584 crore.
Yeah, that's a big jump. And their EBITDA, which is a good measure of their core profitability from operations, that was up significantly too, up 75.7%, hitting INR 531 crore. And the margin was strong, 90.9%.
Okay, impressive margin. But here's the number that really made me look twice. The profit after tax, the PAT, it exploded. I mean, up 9,318.6% year over year. That's INR 131 crore. And the PAT margin jumped to 22.4%. Even cash pat saw a huge increase, 346.5% to INR 254 crore. That PAT number, 9,000%. I mean, how does that even happen? What's driving that kind of incredible leap?
Well, it is remarkable, you're right, and it says a lot about their financial management and operational quality. Strong revenue growth is part of it, obviously, but for paid to jump that much, way more than revenue, it suggests, significant operational leverage kicking in, maybe some efficiencies they've realized, or possibly even some deferred tax assets coming through this quarter. It shows they're not just getting bigger, they're getting much more profitable as they scale.
Okay, so it's profitable growth. What about the overall financial health picture? You mentioned assets.
Right. Looking at the balance sheet, their gross block, that's their total fixed assets, it grew to INR 15,296 crore. That reflects a lot of new projects being commissioned, coming online and adding to their base. And we also see a really big improvement in their debt situation, specifically the net debt to net worth ratio. It dropped from 3.9 times last year, Q1 FY25, down to 1.7 times this quarter. That's a much healthier level.
1.7x. Okay, so less reliant on debt compared to their equity base.
Exactly. Shows a stronger balance sheet. And then there's operational efficiency. Their DSO, days of sales outstanding, that's how fast they collect cash from customers. It continued to fall, hitting just 36 days in Q1, which is amazing, really. Just think, back in FY23, it was 181 days.
Wow, 181 down to 36. So they're collecting cash almost 5 times faster. That's huge for working capital, isn't it?
Absolutely huge. It massively improves their cash flow cycle, means less need for short-term borrowing. A real win in this kind of capital-heavy industry.
Okay, so cash collection is strong. How's the overall debt load looking against their earnings power?
Yeah, good question. Their net debt relative to their trailing 12 months EBITDA is at 4.2 times, which is actually comfortably inside their target range. They aim for below 5.5x. So it shows disciplined financial management. That ratio basically tells you how quickly they could, in theory, pay off debt with earnings. Lower is generally better.
4.2x, okay, within limits.
Right. And one more piece here, their own in-house EPC unit, the engineering, procurement, construction side. That brought in INR 364 crore in revenue and INR 61 crore in EBITDA. Pretty decent margin, too, about 16.8%. So the big picture is strong growth, yes, but also better leverage, solid profits, and much faster cash conversion.
Makes sense. It's a strong foundation. But beyond the financials, the real engine is building capacity, right?
Yeah.
Getting projects running. Let's shift to their operational milestones. What happened in Q1 on that front?
Yeah, absolutely. This is where the growth comes from. They commissioned 350 megawatts of new projects just in Q1. That included a 300 milliW solar project, but also, and this is significant, their very first wind project, 50 milliW in Gujarat.
Ah, so diversifying into wind now, too. Interesting.
Exactly, a key step. This brought their total operational capacity up to 2,890 milliWs. That's a massive jump, like a 115.7% increase compared to the same time last year.
Over double the capacity in a year. And I assume power generation followed suit.
It did. They generated 1,636 million units of power. That's up 107.1%, mostly driven by these new projects coming online, but also because their existing plants ran a bit better. Their capacity utilization factor, or CUF, improved.
Right, the CUF. How much did that improve by, and what does a better CUF really mean for them?
Well, the overall CUF went up from 27.0% to 28.5%. Their Rajasthan projects actually did even better, hitting 30.3%. A higher CUF just means they're getting more electricity out of the capacity they already have installed, more efficient generation, basically, which means more revenue from the same assets.
Got it. So expanding capacity and squeezing more out of what they already have. Smart.
Now let's talk strategy. You mentioned wind, but they're also moving into battery storage, right? That feels like a really important move for the future. It absolutely is. A huge development this quarter was winning their first standalone battery energy storage system projects, BESS for short. That's 550 megawatt hours contracted with NHPC. This puts them right at the cutting edge of the energy transition. You see, BESS is crucial for grid stability. It lets you store renewable energy when it's abundant, like peak sun hours, and release it later when needed. Makes renewables more reliable.
So smoothing out the ups and downs of solar and wind.
Precisely. And they're clearly committed. They've already placed orders for over 3.1 gigawatt hours of these batteries from global suppliers.
3.1 gigawatt hours ordered already. They're not messing around. What about the pipeline for more solar and wind?
Still incredibly strong. Their total under construction portfolio is 4,080 milliamp generation capacity, plus that 550 milliamp of standalone BES we just talked about. And crucially, they've already locked in buyers for a big chunk of that future power. PPA's power purchase agreements are secured for 2,240 milliamp of that under construction capacity.
Okay, so they're de-risking future projects by securing customers early. That makes sense. And it's not just about building new stuff, is it? They're also working on the financial side of existing operations. You mentioned refinancing.
Absolutely. Financial efficiency is key. A great example is they successfully refinance over 1 billion rupees INR, 1,072 crore of existing debt. They got a lower interest rate, around 8.5% per year. That cut their interest cost for one key project by about 95 basis points, so nearly a full percentage point.
And lower interest costs go straight to the bottom line, right?
Directly. It boosts profitability. And on top of that, the market is recognizing their strength. Their newly commissioned projects are getting good credit ratings, like CRISIL A stable, and some existing projects even got upgraded, like one moving up to ICRA A+ stable. These ratings signal confidence from the financial markets in their assets and how they're managed.
Okay, that's a lot of positive momentum across the board. If we pull back and look at the bigger picture, what's ACME Solar's grand vision here? Where are they trying to position themselves long term?
Well, their leadership, the chairperson and MD, Mr. Manoj Kumar Upadhyay, he's been very clear. They're focused on diversifying their clean energy mix, solar, wind, storage now, and really scaling up solutions that make the grid more reliable and flexible. The roadmap is ambitious, aiming for 10 gigawatts of generation capacity and 15 gigawatt hours of BGAS capacity by 2030.
10 GW and 15 GWh by 2030. That's quite a target.
It is. But it shows they're not just thinking about growth. They want to be a leader in India's energy transition, making renewables more dispatchable, more like traditional power. And they project that their current operational portfolio alone should generate annual EBITDA in the range of INR 2,000 to 2,050 crore. So strong returns are expected from what they've already built or are building now.
Okay, so the vision is clear. How did this ambition translate into their market position today? You mentioned they're a top 10 player in India. How are they managing their customer base, their off-takers?
Yeah, being in the top 10 gives them scale. And their diversification across solar, wind, storage, even hybrid and firm and dispatchable projects makes them versatile. But a really key strategic shift is who they're selling power to. Their portfolio is now heavily weighted towards central government off-takers. 86% of their capacity is contracted with them.
Moving away from state-level buyers towards central ones, why is that significant?
It's generally seen as lower risk. Central off-takers are government-backed entities, usually with stronger payment track records. So this shift should help them keep that DSO low, like we discussed, ensuring more stable and predictable cash flows. It's all part of their competitive advantage, really. You combine that with their long-term fixed-price PPAs, their tech adoption, diverse funding, and importantly, their own in-house capabilities for EPC and O&M.
The operations and maintenance, right.
Exactly. Having that in-house gives them more control over costs, project timelines, technology choices, the whole supply chain. It all fits together.
So yeah, if you were looking for a snapshot of a company that's not just growing, but really strategically building for the future of clean energy, ACME Solar's Q1 certainly provides that. We've seen the impressive financials, the big operational scale-up, and that clear long-term vision.
Exactly. That move into wind, the big bet on standalone battery storage, plus the financial discipline and the smart shift toward central off-takers. It really paints a picture of a company adapting smartly within a fast-changing energy world. It's quite a compelling case study in focused strategy paying off.
Definitely. This deep dive showed us it's about more than just megawatts and revenue figures. It's really about how a company navigates the complex shift to clean energy, using innovation and smart partnerships to secure its future. And for you listening, maybe it sparks a question. In a world needing more reliable, flexible, clean power, how might this boom in battery storage start reshaping the whole utility landscape, especially in a fast-growing economy like India? How might it change energy markets in the years ahead?
That's a really interesting question to chew on as you continue your own deep dives.
Indeed. Until next time, keep learning, keep questioning.